Well, the first quarter of 2025 is officially in the books for JP Morgan Chase, and we got the results, and well, the numbers are pretty interesting. Per share profit hit $5.07, which actually beat what analysts were expecting. They were predicting somewhere around $4.61. Revenue also looked really good. It came in at $46.01 billion. So again, that's higher than the estimate. They were expecting around $44.11 billion. So that translates to a pretty solid 9% increase in net income year over year. It hit $14.64 billion. Now, it's worth noting that JP Morgan's acquisition of First Republic Bank last year, that probably played a role in this growth. If you're finding this interesting, by the way, please like and subscribe. So let's talk about the market's reaction, right? Because right after this announcement, JP Morgan's stock price jumped over 2% in pre-market trading, but by the end of the day, it actually dipped just a little bit to $227.11. So that's a 0.03% decrease. And that kind of, quick shift can sometimes tell you that investors are thinking about other factors, not just the good earnings they're seeing right now. But let's see what JP Morgan CEO Jamie Dimon has to say about all of this. So even though the first quarter numbers looked good, Dimon actually highlighted some pretty big uncertainties for the global economy and the financial markets in general. He described the economic climate right now as, well, turbulent. And he pointed to all the geopolitical things happening in the world as a big reason for that. And in his view, there are a lot of different factors in play here. So on the one hand, he mentioned the positive impact of tax reform and a less strict regulatory environment. But then on the other hand, he also emphasized worries about these trade disputes that just keep going. And of course, high inflation, big government budget deficits. And he also thinks that asset prices are still too high. So because of all these complicated factors, Dimon really stressed that JP Morgan needs to be prepared for a whole bunch of different possible economic scenarios. So let's look at how JP Morgan's stock has actually been doing lately. TradingView data showed that it's actually down a bit in the short term. Over the past week, it's down 3.04%, and it's decreased 1.98% in the last month. But if we zoom out a little and look at the long-term trend, it looks quite a bit different. It's up a significant 16.14% over the past year. Analysts have also weighed in with their projections. It's pretty interesting. Their one-year price target for JP Morgan's stock is $266.05, not up the average. But some analysts are more optimistic. They're suggesting a possible high of $330, and then others are a bit more cautious, with a low estimate of $220. So that range generally tells us that most people expect the stock price to go up sometime next year. Now, for a bit of background on JP Morgan Chase, they're a huge player in global finance. Their roots actually go all the way back to 1799. They're headquartered in New York, and they manage a massive $2.6 trillion in assets, and their operations are huge. They employ more than 317,000 people all over the world. The company's divided into four main parts: consumer and community banking, corporate and investment bank, commercial banking, and asset and wealth management. So to sum it all up, the key takeaways from the first quarter of 2025 are per share earnings of $5.07 and a total revenue of $46.01 billion. After they released their earnings, the stock price closed at $227.11. But remember, CEO Jamie Dimon is still warning everyone about all the uncertainty in the global economy, even with these strong results. The analysts are still predicting a one-year price target for the stock of $266.05. And finally, I think the sheer size of JP Morgan's global operations, with $2.6 trillion in assets that they manage and more than 317,000 employees, well, it just shows how big of an impact they have on the financial world. If you enjoyed this breakdown and found it insightful, make sure to like this video and subscribe to the channel for more in-depth financial analyses. See you in the next one.